Hi everyone, welcome to the second episode of our YouTube series, the product of the Supply Chain Center, College of Business, University of New England. My name is Dr. Golshan Madraki. I'm the professor and director of Supply Chain Management program at University of New England, and today we are here with our amazing guest, Andy Brenner. Welcome, Andy.
Golshan, thank you very much for having me again. Appreciate it.
Our pleasure, as usual. So we want to talk about the biggest things that are happening. We are currently in a government shutdown. What is the impact of this shutdown on our economy?
Well, Golshan, it was fairly obvious at the beginning of last week that we were going to go into a shutdown. The question now is, how long is it going to last? And based on the odds that Wall Street is betting, most people are thinking 2 weeks to 3 weeks. I think that October 15th, which is a payroll date, I think might be a date that the Congress can come together and at least put through a continuing resolution. But it looks like it's going to be another couple of weeks, which means that the government's closed. There's no unemployment data. This past Friday, we would have gotten the normal non-farm payroll reports. Those did not come out. But, there are alternatives that people are using to try and determine what the numbers should have been. So there are different surveys, and I can talk about that now, or I can talk about that in a few minutes. But as far as the government shutdown, we think it's going to slow down the economy a bit, but not dramatically so. So far, it hasn't had any effect on the stock market. It's had a minor effect on the bond market, but we'll have to wait and see how that transitions over the next few weeks.
That's a great analysis. Speaking of bond market, Andy, Bloomberg says that we need to buy bond. What do you think? Should we do it? Should we not do it?
Well, Bloomberg over the weekend led with a story saying that clients should be buying long duration bonds, meaning 10 years and 30 years. I don't think this is the right time to do that. And what happened overnight just really widened these spreads out, and you would have lost some money. And that was because the Japanese got a new prime minister who's pushing fiscal stimulus, and the Japanese bond market, their 30-year treasury, rose in yield by 14 basis points, which is quite a lot for a 30-year. And that caused U.S. treasuries 30 years to back up 5 or 6 basis points. So we don't think this is the right time to be buying duration bonds. And we look at the economy, and even though the government is shut down and employment is really not growing, the economy seems to be doing just fine. I mean, GDP, Atlanta GDP is 3.8%. That's a very strong GDP number. The stock market is at new highs. Gold is at new highs. The dollar has not been going down recently. So we don't think this is the time to be buying long duration bonds. But what we do think is it's time to continue to buy short duration bonds, those out to 4 to 5 years, and you might want to actually go out into the credit area. So investment grade corporate credit offers some good yields, 5.5%, 6%, and we think that makes a lot of sense right now.
Fantastic. So now, how about the rates? So what's going to happen to the rates? I know that we are expecting some reducing the rates at the end of this month, or maybe in the December.
Right. So let's break it down. So there are really two markets. There's the long end and the short end. The Federal Reserve is very much concerned about the employment rate. And even though the employment rate doesn't seem to be rising much, there isn't a lot of hiring going on. So the Fed is going to give what we call, basically cuts just to be on the safe side. So we expect the Fed on October 29th, 30th meeting to cut rates another 25 basis points. And we expect them to cut another 25 basis points at the end of December. So 50 basis points of cuts for between now and the end of the year. That should help the front end of the market out to about 4 or 5 years. The long end of the market, as I just said, is going to be looking more at the U.S. economy and the global economies. And the U.S. economy still seems to be doing very well. There's a lot of stuff being paid for by AI. There's a lot of investments going on. And there's actually worries about shortages of enough electricity or electrons of which to determine, to run AI. So we think that the economy will still be booming along, and we think the longer rates could probably back up somewhere at 10 years, which are about 416 as we speak right now. They should move back to about 430. And the long bond is the 200-day moving average is 481, and maybe that should get closer to 4 7/8. So we're not a big fan of the long duration bonds right now, but we think short duration bonds are fine.
Thank you. And you know that Andy is writing very informative commentary every day, and I'm a huge fan.
Thank you.
So this morning you wrote something that was a little bit, I don't know how to say, exciting at the same time, challenging for me to understand. You said it's a FOMO environment. Can you elaborate on that?
Yeah, what we're seeing right now is FOMO stands for fear of missing out. So what we've seen are people just seem to be grabbing stuff. They're grabbing equities, they're grabbing the NASDAQ, they're grabbing the S&P. Those are setting new records. They're grabbing gold, they're grabbing silver, they're grabbing Bitcoin. And so a lot of things continue to go up. Copper's been going up, uranium's been going up. And you look through it and people feel that they're underinvested. This usually happens towards near the top of a market. And while we're not calling a top right now, the market is what I call bubbling. In other words, with PEs around 23, price earnings ratios around 23, that's very high. And so we would expect some kind of pullback, but I can't tell you when, and I can't tell you what the catalyst is going to be. It obviously isn't the government shutdown.
Do you have any other advice for us, like regular people like me, that what should we do in this situation?
Well, I think you should continue an exposure to the equity markets. I wouldn't go overweight equities, but I think you should have a normal allocation because you cannot time markets. A lot of people have missed out tremendous returns by not being in the market at the right days, the right 5 or 6 days that the market seems to go up. During a year's time. So I would say have your normal allocation to equities, have some good stuff, buy some investment grade bonds, buy some short treasuries. Even treasury bills make a lot of sense right now. They're still yielding, the short ones yielding 4%. However, when the Fed cuts 2 more times this year, that will probably bring it down to 3.5, 3.75. But yeah, I would say have those kind of exposures. And, if you want to have some emerging markets, some anti-dollar play, that makes sense. We're not a big fan of gold, especially as gold approaches $4,000 today. And we're certainly not a big fan of silver as it approaches $50. So, and as far as Bitcoin, I'm the wrong guy to ask about Bitcoin. I'm still not sure exactly what Bitcoin is. It's basically an alternative storage of money, but I don't see that as a good value of investment. However, if we have a younger audience, they're going to be very much involved in it. Blockchain is here to stay. Stable coins make a lot of sense, but I'm not a big fan of Bitcoin. You can pepper it with some international stocks too if you want. But yeah, you need to keep an exposure. However, you need to have money on the sidelines, in case there is a correction, in case you want to buy.
Thank you. And one more question out of blue, but it's kind of related. So you said we are talking about currency, and I always imagine Bitcoin is kind of like a currency, like a digital currency. And I read something about yen, Japanese yen value. So do you think that people would go and buy when the currency is dropping and then sell it? Is it a good way to get
Well, I think
money?
you're asking me 2 different questions. One, I don't consider Bitcoin a currency. That was how it was originally, talked about. But Bitcoin's not a currency. It doesn't act like a currency. It doesn't, currencies move in small increments. Bitcoin moves in large increments. And so there's some major moves. So I don't say it's a currency. It's more a speculative investment for those that want to play the storage of value. As far as the yen goes,
So you named, if you want to describe Bitcoin, you said storage of value. your definition.
Yeah,
I like that.
yeah.
I like
but
that. Yeah.
so is gold. You know, what we've seen is the dollar's been the largest world's reserve currency owned by central banks. The second has been, up until recently, the euro. That's been replaced by gold. Central banks now have a large reserve, especially China, of gold in their central banks. I'm not a fan of gold because gold really doesn't yield anything. But you know, gold has always been an anti-dollar play, and as the dollar is down dramatically this year, even though it's been pretty steady recently, gold is really outperformed. I'm not a big fan of gold, but I think it does deserve to have a few percentage points in your portfolio. But as far as what you're saying about the yen is going to be, because of the fiscal stimulus being proposed by the new Japanese Prime Minister, the yen is going to be very tricky over the next year. And one of the things that has been prevalent on Wall Street and across the world, the yen carry trade. In other words, people over the years have been short the yen. In other words, short the value of the yen and used that money in which to buy other products because of the low Japanese interest rates. And it looks to me like that's going to happen again. We'll have to wait and see what they end up buying. I don't think it makes sense to use that to buy long bonds because Japanese long bonds hit a 25-year high in yield today of 328, 329. So I wouldn't say that makes sense. But you know, maybe people are going to use the Japanese currency of which to fund emerging markets, which to fund equities, which to fund other investments like, you know, private equity or private debt. So we'll have to wait and see. But I would not be long the yen right now.
Thank you so much, Andy. That was great conversation, and I learned a lot, as usual.
Very good. Happy to do this. We're going to continue to try to do this periodically when there are events and when it makes sense.
Thank you, and I hope you have an amazing week. See you soon.